Is a second mortgage always a good idea? A second mortgage isn't inherently good or bad. It depends on your financial circumstances. For some homeowners, it can be an effective way to finance home improvements or cover major expenses without selling the property. But it also comes with additional responsibilities. Adding another loan increases your monthly financial commitments. If your income becomes unstable or unexpected expenses arise, managing multiple mortgage payments can become much more difficult. That's why it's important to evaluate your overall financial health before borrowing against your home. If you're already struggling with mortgage payments, there may be other options worth discussing with your lender. Depending on your situation, these could include a loan modification, a short sale, or a deed in lieu of foreclosure. Each option has different financial and legal consequences, so homeowners should fully understand them before making a decision. So, when does a first mortgage remain your best financing tool? And what are the biggest lessons every homeowner should remember before borrowing? We'll wrap everything up in the final section with the key takeaways you need to know. Key takeaways before you sign a mortgage. Before taking out any mortgage, it's worth stepping back and focusing on the bigger picture. A first mortgage isn't simply the first home loan you've ever had. It's the primary loan attached to a specific property, and it holds the highest repayment priority if the home is ever sold through foreclosure. That priority is one reason first mortgages typically offer lower interest rates than second mortgages. If you're shopping for a home, remember that approval isn't based on just one factor. Lenders look at your credit score, income, down payment, debt levels, the type of property you're purchasing, and the mortgage program you're applying for. Another important number is your loan-to-value ratio, or LTV. Borrowing more than 80% of a home's value often means paying for private mortgage insurance, or PMI. While PMI can help buyers purchase a home with a smaller down payment, it also increases the monthly cost of homeownership. As you build equity over time, you may have the option to borrow against your home through a second mortgage, such as a home equity loan or a HELOC. That flexibility can be valuable, but it also comes with additional financial responsibility. Before taking on any new debt, ask yourself a few important questions. Can your current income comfortably support another monthly payment? Would your finances still be stable if interest rates changed, your income declined, or an unexpected emergency arose? Borrowing against your home's equity can make sense for some homeowners, but only if the repayment fits comfortably within a well-planned budget. Finally, remember that mortgage decisions shouldn't be based solely on getting approved. It's equally important to compare interest rates, closing costs, repayment terms, lender requirements, and the total long-term cost of the loan. Taking a little extra time before signing can potentially save thousands of dollars over the life of a mortgage. At the end of the day, understanding how a first mortgage works gives you a stronger foundation for every major home financing decision. It helps explain why lenders assess risk the way they do, why loan-to-value ratios matter, why private mortgage insurance is sometimes required, and why second mortgages generally come with higher interest rates. Slate. Whether you're preparing to buy your first home, considering a refinance, or thinking about tapping into your home's equity, knowing these fundamentals can help you borrow more confidently and avoid costly mistakes. Homeownership is one of the biggest financial commitments most people will ever make. The more informed you are before signing a mortgage agreement, the better positioned you'll be to make decisions that support your long-term financial goals. If you found this breakdown helpful, consider sharing it with someone who's planning to buy a home or refinance their mortgage. And if you're interested in learning more about personal finance, mortgages, investing, and the latest developments in the U.S. economy, be sure to follow the channel. Thanks for watching. We'll continue following the latest developments in personal finance and home ownership. See you in the next video.